in order to be a successful, sustainable investor, you have to be long term. On the balance of probabilities, that's the best way to generate long term wealth. And if you care deeply about these big sustainability issues, that's going to be here and not just today, but they're just going to compound over time, then you have to be business owners and care about those issues and not just benefit from being invested in companies that are providing the solutions, but also manage those risks as well if you're on the other side.
Welcome to The Greener Way. I'm your host, Michelle Baltazar, Executive Director of Media at FS Sustainability. We are recording on Gadigal land, and we pay our respects to the traditional custodians of country and elders past and present. Today's guest is Jai Mirchandani, CIO and Portfolio Manager at Elm Responsible Investments, to give us an inside look to the world of an RI manager in the current climate. And if you stick around, he'll also be talking about the emerging trend here in Australia around sustainable investing by the end of this episode. Jai, thanks for joining us.
Thanks for having me, Michelle. Great to be here.
Now, I didn't mention that besides being the CIO, you are the founder of Elm Responsible Investments. So tell us a little bit more about that.
So my background is in traditional investing. I was at a firm called JCP Investment Partners for 10 years, which was a traditional investment manager. We were one of the biggest institutional equity fund managers in the country. And prior to that, I was working in M&A in London, and I've got a master's degree from the London School of Economics in finance, accounting, and economics. And all of my career has been in traditional investments or traditional finance. And then in 2019, when I was looking at the market and thinking about the world, I realized that over my career, there was very little conversation about sustainability and the impact of our investments into the real world. And I went overseas for a little bit to Europe and met with some of the leading fund managers over there and saw that, there's so much going on. So much, I guess, a different way of investing that I wanted to bring back to Australia, where we're not just thinking about ESG, but rather thinking about and investing in companies that are operating in important themes and sectors that are driving positive change and operating that sustainability universe. And obviously, as my background is in traditional investing, I wanted to bring in that robust investment framework as well to make sure that we're generating strong returns for our investors. And when I looked around at the market here in Australia, I saw that there weren't too many options back then. And even now, there's a lot of ESG funds, but, very few funds, if any, out there that are looking at companies that are investing and operating in really important key sectors of the economy when it comes to sustainability. At the time, I also started my own family and thinking about the future and how we should be investing was front of mind as well. And that's why I started Elm.
It's amazing how I've interviewed a couple of leading experts in responsible investments. And for one person, it was like the 7-year-old daughter asking him, Dad, what are you doing for the world? How are we preparing for the future? And that was like a profound change where he said, right, I have to change how I invest. And it seems like you've also had that same kind of sentiment as when you started. So now fast forward to where we are. It's been, we've had COVID and now we have a new US administration, which so happen to have climate change policies that aren't as favorable as in the past. So you could argue that it's been a tough time for responsible investment companies, if you like. So how has this impacted the way you invest?
That's a really good point, and I guess, you raised climate as a theme and the change of government in the US and what that means for that sector. For us, clearly that's an important place to invest in or an important sector because we all know the catastrophic effects of what's happening when it comes to climate change. When you put your investing hat on as well, the idea or concepts, the traditional concepts around, say, diversification, valuation, risk, they're equally as important. So when we look at what's happening in the US around, the policies on climate, yes, we have investments in that sector. Yes, it's been volatile. Yes, it's seen challenges there, but that's only one part of our portfolio. And, we're looking for the industry leading, sector leading companies in all the sectors that we invest in. And, yes, right now, the climate theme is struggling and has challenges. But at the same time, there are many other parts of our portfolio that are doing incredibly well. And as a portfolio manager and process, that's what you just have to do. I think if you're just focused on the theme and forget about the valuation investment side and the risk, that's when you start running into problems.
So let's go through examples. I know that your portfolio, just one of the funds that I was looking at through your website, you have fintech, future technology companies there, EV companies. Tell us about those stocks and if they are impacted by non-ESG considerations, how does that impact your allocation to those stocks?
So I just want to make clear that we're not ESG investors. So yes, environmental, social, and governance factors are important, but the more important thing for us is to invest in the sectors that are driving positive change. And the reason why we believe in that is because if you're just an ESG investor, and I know there are a lot of ESG options out there, but if you're just an ESG investor, you could have a gambling company or a fossil fuel company with excellent governance, and you're included in this ESG portfolio. We saw that happen with, I think it was ExxonMobil that was included in the Dow Jones, I think the S&P ESG index because it had good governance. But the question is, well, is drilling for more fossil fuels a good thing for sustainability in society? And is it doing anything for climate? No, it's harming society and the environment. For what we're doing is we're looking at the sectors and companies that are providing solutions to a lot of these challenges. So, yes, we've identified those themes. The one that you mentioned is electric vehicles. And our consideration, or what we look at is, yes, electric vehicles is important to decarbonize our economy. And also, which are the companies that are best placed, that have the strongest forward returns? And then we go off and invest in those companies. If the governance is poor, for example, or other ESG factors are poor, then that gets taken into consideration at our valuation level. Because, good governance, for example, is good for shareholders, but it has nothing to do with whether that company is driving positive change and being good for the environment, good for, society at large. So I think what we're doing is we're finding those companies that are actively doing positive things that also have strong forward returns.
So I understand that you do look at both ESG and non-ESG considerations, but that you're not really an ESG investor per se. But certainly the industry is impacted by greenwashing. And
Yeah.
I'm always asking everyone that I talk to, well, what do you think of greenwashing? How does it impact your fund strategy?
So what we do is we measure the the positive and negative impact a company has on the environment, and then look for the companies that are obviously positively affecting the environment and all stakeholders for that matter. And so we have a really robust process there. So our Elm Responsible Investments Global Fund is tiered as the Sustainable Plus category by the Responsible Investments Association of Australia, which means that we are true to label, and we are I think there's only a handful of funds at that level. So we are, as close to being, I guess, one of the most sustainable and impactful funds on the market today. When it comes to greenwashing, what we do is, well, we follow our process. And by following our process, we ensure that we're tilting the portfolio to the companies that are most driving positive change and that are good for the environment and also have strong forward returns. There's been a lot of lawsuits and a lot of light shed on shone on the space, and rightfully so. If funds and super funds and product providers are saying they're doing one thing, but in fact doing something else, then they should be called out. But the industry here, we've got these classification, these ratings or classification systems like the RIAA that proves that's helps consumers identify and find the most authentic funds, and we're certainly one of the top ones in there.
Tell us about the investment themes that will have a big role in your fund in the future.
Right now, we're excited about the climate and renewables theme, and it's really easy. You raised what's happening in the US, right? And even here in Australia, there's been a big spotlight on offshore wind. And we're doing a lot of work right now to see, well, what is the best renewable energy mix we should have that's going to be good for society, good for the environment, good for investors, and good for the end customer through lower prices and reliable prices. We're doing the work on it with Professor Sarah Bekasi, who is the lead counsel at the Biodiversity Council, and her team there. And she does our sustainability research for us as well. Our view is that we think that we can. We're said, we're still doing a lot of work behind right now, but the initial indication is that yes, we can have a renewable energy mix that ticks all those boxes, and that's good for everyone, even good for nature as well. We go, okay, yes, there's been a lot of negative press coverage on offshore wind, for example, but it's looking like solar and batteries is a great option for us here. And so we're really excited about the opportunities there. Fintech is really exciting as well. You wouldn't know it here in Australia because we all have access to bank accounts. It's pretty easy to get. The costs are low. I think something like 99% of people have a bank account, but that's not the case overseas. Even in the US, that's not the case. In Southeast Asia, that's not the case. In Latin America, that's not the case. And we know that access to financial services, this is a simple bank account, is good for society, and it brings up the middle class. And so by investing in fintech that is profitable, well run, and growing really, really quickly, can have that effect that's positive on society by delivering financial services to people who previously didn't have one. They can use technology to do better credit checks and the like, and generate incredibly strong returns for shareholders. So that's what we're looking for, and we see great opportunities in both fintech and that renewables and that climate themes.
Now, I read somewhere that you'd like to see a fund manager transitioning from being arguably a stock trader or someone who looks at the valuations and trades to more of a business owner. And there are there are fund managers who are in between and who do act like business owners. But how do you define that? How do you define being a business owner in the responsible investment space?
Our view at Elm is that if you care deeply about sustainability and RI, then you have to be a long-term business owner. If you're just renting a stock, then of course you probably won't care about what's going to happen to that company, good or bad, in 5-10 years time in the future over the long term. And so a lot of the benefits and risks associated with sustainability, because they're so long dated, a lot of the stock traders, is not a priority for the stock traders. But for us as business owners, we care deeply about those issues. And it's not like it's not like we became long-term investors because we care about, sustainability or vice versa. It's sort of happened organically. And we also know from an investments perspective that, there's been academic studies showing this, that the more you trade, the worse your long-term returns are. So you put two and two together and go, well, actually, in order to be a successful, sustainable investor, you have to be long-term. On the balance of probabilities, that's the best way to generate long-term wealth. And if you care deeply about these big sustainability issues, that's going to be here in not just today, but they're just going to compound over time, then you have to be business owners and care about those issues and not just benefit from being invested in companies that are providing the solutions, but also manage those risks as well if you're on the other side. So for us, it was a no-brainer. And naturally, that's the way I prefer to invest as well. That's how we operate.
Final question. Anything else you'd like to share with our listeners, especially the fact that we always talk about the publicly listed opportunities in the market, but what about the private space?
We certainly see a lot of innovation in the public space and sustainable companies in the public space. But at the same time, there's a lot of interesting stuff going on in the private markets. And when I say private markets, it's not about venture capital, PE companies, PE firms trading established companies between each other. And so you question the actual value creation of investing in those types of deals. What we're doing is we're looking at companies that require capital, that are innovating, that are driving positive change, and we're able to participate and support companies like that through their life cycle. So, it's certainly an exciting space for us. We're working on something right now, and we're going to be seeing many more opportunities in that space.
Well, looking forward to getting finding out the developments on that. Jai, once again, thanks for joining us.
Thanks so much for your time. Really appreciate it.
This is The Greener Way. I'm your host, Michelle Baltazar. Thank you for listening.
The Greener Way podcast is a product of FS Sustainability. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional, legal, or tax advice. Before making any financial decisions, you should read the product disclosure statement, and if necessary, consult a licensed financial professional. For more information, head to the disclaimer page on the FS Sustainability website, fssustainability.com.au.